Today, we have a very special episode of the TMG People First podcast, and it's special because we don't have any special guests. It's
You're
just
special, Guff.
Thank you. It's just Jason and I talking about ideas, what's going on in the market, how our clients are perceiving value, how we can deliver value, and ultimately what's going on and what to expect in 2026 when it comes to insurance, governance, leadership, and how we kind of see things moving. Did I miss anything there?
No, I think we're off to a good start. So yeah, I think you caught it all on the intro. What's going on in the real estate space?
Well, real estate is a lot is going on. On January 1st, we received our first reinsurance reduction in rate, the first time in 40 quarters. Okay. So because of that, it was a 15% reduction. April 1st just happened, another 15% reduction on reinsurance. And because of that, there's more competition in the market. There's more appetite. My clients like me again. It's great. However, the one pitfall of this that I tell people and prospects in general is don't be happy with the status quo if your agent comes to you and says, hey, you're 10 or 15% less. It's like, anybody can do that right now in this market. It is not impressive. We like to provide benchmark data. And so if you get a 30% decrease right now, you're feeling pretty good about yourself. Well, what if your neighbor only got a 10% decrease, but they were already paying 50% less? Now you're not so happy, right?
Sure, it's relative, right?
It's relative. And so we keep grading our own papers and just saying, oh, this is what I was year over year, and that's the only benchmark. That's the only data point our clients have, our prospects have. That's why I'm big on benchmark report data. Yes, compare yourself year over year. That's your expenses. That's your operating income that you've been using. But with more data points comes more clarity, and with more clarity comes more capacity. And so that's what's going on in the real estate market. A lot of buyers are happy, but and they should be. It's good to pay less, and that always feels good. But I don't think they have the clarity necessary to really make the best strategic decisions for their portfolio long term. What's going on in your space?
Well, I would say the opposite is happening. The markets are electric right now.
What do you mean by that?
Medical trend this year in 26 is, depending on which publication you read and the research that we've done and produced, is anywhere from 8.5% to 10.5% increase. So when you look at, and then oftentimes the benefit space as a whole, that compound annual growth rate or trend, medical trend, is starting to really drive impact to bottom line for, not positive impact, by the way, but just really hurting businesses and employees. Because it goes right to the P&L, and right to W-2 income. So medical trend is essentially cannibalizing P&Ls and W-2 income. So that's been going on for a long time. However, now the market's gotten hotter. So
when did that start?
It started about, I say some leading indicators were maybe 18 months ago or so. You can start to see some trends happening in that direction just anecdotally. But then now you're starting to see a lot of momentum around that. You have a lot of private equity in the space, which I think private equity can be great in certain industries, but for the medical industry, there's really not a value for PE in that space to the end user, except costs go up.
Yeah. So you talk about value. Tell us about the legislation that's hitting people on the fiduciary side. You're not the only one talking about it now. You were the only one talking about it 3 years ago. What's developed since then, and what would you worry about if you were, you are a fiduciary of the Mahoney Group, but what would you want to say to somebody that listening, or something that would be crucial for them to look at their fiduciary responsibility when it comes to their health benefits?
I would say be curious about everything, question everything, trust and verify everything, and most importantly, begin documenting your prudent process.
What if you don't have a process?
Then you open yourself up for lacking resilience in litigation. So in other words, if you were to get sued, so let me back up. So what's happening is class action lawsuits are starting to happen, meaning employees are suing their employers. And so as an employer, you're now the big fiduciary, and you should be documenting everything, but just as important, documenting your prudent process. So you have to have a governing process at which you operate your benefits by, and then that process should be clearly documented. And then those decisions should be also clearly documented. Like you have to basically prove why you made the decisions that you made in the event you end up in a class action lawsuit, that you have some resilience against that lawsuit. So the notion of taking a 15% increase from a carrier and then having a fake negotiation to 10, or in real terms, an increase that's 30%, a fake negotiation that makes it 15, you have to be able to defend that decision.
I see.
So it puts a lot of pressure on organizations, and the pressure is just increasing because most people don't like their benefits.
Yeah.
They feel like they pay too much, and they feel like they get too little. And so that process has been going on for many years now.
And what are you doing to help employers take control back? I mean, there's some things that obviously you've been heavily involved in here with the self-funding and a lot of other things, but what would you want to share about that?
Yeah, I think helping folks recognize what's empathy and what's apathy.
Let's go deeper on that.
Apathy is expensive.
But apathy is not failure. This is the whole thing for me, right?
Right.
Like stagnation is worse than failure. Apathy is worse than failure. Failure is a car crash.
That's right.
Apathy is just a leaky tire that you keep filling up every 4 or 5 months and you never really take it in, right? Is that what you're...
Yeah, for sure. It just leads to learned helplessness, right? So you just sit in this place of, I can't do anything about it. I don't know what to do about it. It's just the way it's always been. And so we're just at that inflection point on the EB side that's, employers are getting more curious now, though, too, because they can't take increases of magnitude anymore because they've already passed a lot of those costs off to employees by a combination of contributions or deductibles, right? So paying more for higher deductibles, et cetera. So what in the soft market, Guff, how are you starting to separate? Because I think soft markets are great.
Great opportunity for new business.
Yes. And I think it's also the best way to differentiate yourself in the market. Because when markets are firm and hard, it's just it's chaotic. But when they calm down and you're actually able to move a market, like talk to me about that. How are you differentiating in this environment?
So when I say I lead with price, it's not like I'm price heavy or price sensitive or saying, oh, I'll be the cheapest. What I say is, hey, everybody's saving money right now. That's great. And we're going to save you money, and everybody can do it. Geico. Call Geico. They could even save you 15% right now.
By the way, I have a great story that I will share offline for another day, but remind me to talk to you about the story I had with a governor of a state a few years ago about that exact comment.
Okay, good.
Yeah.
Will do. Well, you sure you don't want to share it now? I mean,
no, it's
too rated R?
Yeah,
okay.
It gets rated R, I think, afterwards.
So, okay, you're saving money. That's great. What is your strategy? And if you don't know the 2 or 3 things your insurance strategy is that's clear and concise, then you don't have an insurance strategy. You're just having insurance placement and you're transacting. And so that's great. You're going to capture cost savings this year in year 1 because of a soft market, nothing that you did special. Why not trying to do something special with the team that you're aligned with for a 2 or 3 year period? And we focus a lot on the lender piece. We can negotiate out flood zones. We can negotiate lower values, especially if you're sharing this on a blanket policy, so there's no risk to doing that. And when I say no risk, there's risk in everything, but what I mean is you're not compromising coverage. you're still can lower your values and share it between multiple states. That's a big one. But a lot is on the lending piece because, as we like to say, every $15,000 of NOI increases the asset value by $250,000. And I said that the other day, and someone said, "Well, it's a 4% cap rate." I said, "Well, that's $750,000 for every 30,000." He goes, "Yeah, you're exactly right." And so we focus a lot on the NOI
Mm-hmm.
because that's where the value of that asset is directly tied to. And
It's generating more loan capacity.
correct, it's
Yeah.
generating more loan capacity. It really can be the difference between a capital call to your investors or distribution. Like that's how massive the swing is when it comes to an insurance spend. Another really cool thing, and I would actually like to do more of this, is it used to be you'd go direct to Lloyd's of London, maybe at 10,000 or so units, and growing and scaling and doing something extremely out of the ordinary. That's not the case anymore. And so going direct to Lloyd's of London, you can do that now at about a 5,000 unit clip. And what's cool about that is it's still innovative and creative, but there's still that old school vibe of you're meeting your underwriter face to face. We're flying our clients and prospects out to London, the Lloyd's of London building, sitting in front, cutting a deal. But it's also that long-term relationship where you're closer to the other side of the money. And the closer you are to the other side of the money, the better, you're going to be treated more fairly. It's going to be more transparency. And you have a real relationship, not just with your broker, but with your whole broker team and the underwriting team on the other side.
Yeah, it's funny you say that. We've talked a lot about that internally as well, meaning I find our best trading partners from the reinsurance side are the partners that we have direct relationships with the underwriters.
Yeah.
Because explaining exactly what we're trying to accomplish or actually doing and why varying decrement should happen or why varying risk tolerances should be adjusted as a result of the impact of us protecting that asset. So I find that is the ultimate relationship, because on our side, particularly in the reinsurance environment, most alphabet houses will use GAs. It's either one that they own or it's one that they'll outsource to, or a combination of both.
Sure.
Which public service announcement, that is there's a breach in process there from a governance standpoint.
Sure.
So I think GAs are going to have struggle in our environment going forward. But that's just because it adds cost and loads cost on top of it. But having that direct underwriting relationship, I think, is one of the key principles for any trading partner and any relationship value on a go-forward basis, because they control so much of the destiny of what that client can receive.
And you think about it, like when you get a sticky claim or you have a tough renewal, it makes it a little harder to deny a claim if you know the people face to face and you have a whole, you've been just building up that bank account together, right? So, all right,
Trust matters on that side too, right? I mean, they have to trust that, because they also will they're investing in you just as much as your client, right?
Yes.
So, or prospect for that matter, mostly client, but they're making that investment based upon knowing that you're bringing in the solutions that are protecting that asset as much as possible. So they're making just as much of a bet on you as they are the client.
Agreed. Well, let's go to the future. We talked about the state of the market a little bit. There's a lot of doomsdayers out there saying that, insurance is going to be replaced or this or that. But where do you see the industry going overall in the EB space?
Yeah, I think AI is going to have an impact on our business, just like everybody else's business. But I think the ability to drive human connection is still going to be relevant and going to matter. EBs, it touches every employee, every family, and it's an important part of the total compensation package for companies and clients. And so the ability for us to build in resilience within that package, that offering, is still going to be needed. There is tons of innovation that's happened in the space, but it's the ability to navigate that innovation. It's the ability to still drive a prudent process, still drive outcomes, still protect the P&L, protect wages, the ability to, lay down that infrastructure is still relevant and will be relevant.
I agree with you. Now, have you heard of the power law or the principle? It's basically 1% dominates the 99% of the market. So like the Magnificent Seven right now in New York Stock Exchange, they dominate the stock market. A lot of closed people where authors, 99% of the people in the world read 1% of the authors. 99% of the people in the world listen to 1% of the music artists, just things like that. And I think we were already kind of going from 80-20, the Pareto principle, to like a 90-10. But now I'm thinking that AI is just a force multiplier for the top talent and the highest innovators. I think it's
like it's garbage in, garbage out.
Correct.
I mean, it's still garbage, right?
Correct.
It just looks prettier, but it's still
Correct.
trash. So,
I agree. And it's just going to force multiply the top talent in our industry. Think about what it's done with the people here already. And AI is still figuring itself out. It's doing some crazy cool things, but nobody is like, hey, set it and forget it yet. Right. Sure. And when we can do that in some certain tasks and in some real ways, then I think the big unlock is going to be the talent that unleashes.
Yeah. Just driving efficiencies and speed through efficiencies, right? I think be quick, but don't hurry. John Wooden, right? Just kind of driving through that, some of the mundane tasks. I think that being able to roll through that. But how the younger generation here at TMG gravitating towards AI, you think?
Well, it's interesting. They all view it differently. Some learn really, really quickly by it, and some are like, man, they're a little fearful about it. It's like, whoa, you guys are the young youth that are going to harness this.
But you still have to understand what it produced, right?
Correct.
So
there's a little bit of a disconnect.
There's a learning curve. Like it doesn't shorten your learning curve per se if you don't know what to put in it.
Yeah, you're right. And what's interesting now too is we have clients that'll just send us questions, and I know they uploaded it in chat.
Yeah,
it's like you're asking a very technical question. I'll answer it, but you've never asked anything before. Now you're going from someone with no college degree to like a science, physicist or something crazy.
Well, that's good though. I mean, that part of it's good if they understand what they're trying to get to.
Yeah,
right.
No, I think it's good.
It just creates more clarity and more value.
I agree.
So
it's really good. I just think an agent that says, give me a copy of your policies is irrelevant now, because give me a copy of your policy so I can review them. I just, hey, do you want to throw it in chat or do you want me to? Now my chat bot is going to know what to look for a little bit better and has been trained. So yeah, okay, I can show you how to do that. But I think it's about, and we talked about this at the beginning, strategy. Can my perspective and expertise attach to your future ambition? And if the answer is yes, you should work with our team. If the answer is no, you should not work with our team. Let's simplify it. Let's get clarity. So that's how I kind of feel. Well, what else do you want to say? What else do you want to talk about? Talk about a little bit where we think it's going, where it's at in our niches. What else do you have other than Mahoney Group is hiring top talent all the time, every time? Can never have enough talent that has high character. And we're growing. We got some cool things to announce here in the future as far as offices and growth. But that day's not today. What else do you want to talk about?
Yeah, I would just, I guess, build on that and just, I think we're excited about the future, continue to be excited about the future. There's lots of disruption out there with tons of acquisitions that have happened in our space and all the consolidation. And there's just a lot of talent out there that is generally unhappy from being acquired, because oftentimes that acquisition has a different North Star.
Yeah.
And so our North Star is around people first, or it's pointed to people first, a future-focused organization. We're driving great growth and employee-owned. So it's a great place to be. So
yeah, if you like to be micromanaged, I was gonna say, if you like to be micromanaged and you're not top talent, we're probably not for you. But no, it's an exciting place, exciting times. Brad Rucker, our CEO, is doing an amazing job. It's been really, really fun to kind of attach to his direction and vision And what a great time to be at TMG. That's for sure.
Yeah, Brad's doing a phenomenal job, and I would say the rest of the executive team
Sure.
is doing a great job as well. So just super exciting times. Making lots of progress and doing a lot of great things. So super excited. Yeah, man, it's just good to touch base. Haven't had a chance to connect with you in a bit, so it's just been good to get connected here and
For sure.
spend some time together, man. So, what else you got?
Well, Jason, I got a lot, but it's only 20 minutes this version, and we don't. Nobody wants to hear us talk longer than that. So
Let's keep it short and sweet.
Keep it short and sweet, and I would just tell all the people listening, and it's a great time to be alive, and the future is bright, and let's keep rolling.
Right on. Good to connect.
Yeah, man.